Hello everyone, my name is Peter and I'm running Compounding Quality. So, compounding on the one hand lets the magic of compound interest work for you. Compound interest is the eighth wonder of the world. And on the other hand, quality. So, quality investing, a strategy that did tremendously well over the past 2 years and even decades. So, what we basically are trying to do is we are trying to invest in quality stocks. And by doing that, well, we let the magic of compounding work for us. In the background, you see a poster from Warren Buffett with his magical quote. Well, rule number one, never lose money. And rule number two, never forget rule number one. And one thing I can tell is that many investors think that Warren Buffett is a value investor. But as a matter of fact, Warren Buffett actually is a quality investor. It is true that it is early days. Warren Buffett was a value investor, so he preferred to invest in very cheap companies based on the price to earnings ratio, based on the price to book ratio, and so on. But over the years, under the influence of Charlie Munger, Warren Buffett evolved from being a value investor, buying cheap companies, to be a quality investor, meaning buy wonderful companies. So one of the first quality stocks or quality companies that Warren Buffett bought was See's Candies in 1972. Well, he bought it for a few million, and today it has already generated billions in revenue for Berkshire Hathaway and Warren Buffett. And that's really the investment or really the moment where Buffett started to see the importance of great businesses, the importance of pricing power, and so on. And over the years, well, he invested in many more quality stocks. Think about Coca-Cola, think about Apple, and so on and so forth. So 1972, he bought See's Candies, and that's when he shifted from value investing to quality investing. 1972, that's already more than 50 years ago. So as a matter of fact, Warren Buffett has been a quality investor for over 50 years, and well, he's one of the most or best investors in the world. So this strategy did really, really well for him in the past. Quality investing, now you know, is a very interesting strategy. But next question you might have as well, interesting, but how can I find those kind of companies? And what is quality investing in essence? Well, if you ask me, quality investing is all about investing in the best companies in the world. As Buffett liked to say, well, it's far better to buy a wonderful company at a fair price compared to buying a fair company at a wonderful price. And that's what quality investing is all about. Well, how are you going to invest in those wonderful companies? In practice, we are basically using three very easy, very straightforward steps. First and foremost, we are looking or we want to invest in wonderful companies. So wonderful companies are companies with a clear competitive advantage. They have a strong moat, they are very profitable, a lot of reinvestment opportunities, a lot of room for growth, and so on. So wonderful companies. Second point, we want those companies to be led by excellent managers. So in an ideal world, the founders are still leading the business. If not, we want the family of the founders to be involved. Why? The study from Harvard Business Review basically told us that founder-led businesses outperform the market by 3.9% per year on average, which is amazing. So wonderful companies led by excellent managers, and then the market often recognizes that you're talking about a wonderful company led by excellent managers. Then the third point is, well, to try and pump those companies up at a fair valuation level. So if you can buy a wonderful company at a fair price, that's exactly what you want. And maybe to elaborate on this, this is quality investing is a fundamental difference, has a fundamental difference compared to value investing, for example. Why? Well, when you invest in a value company, in a cheap company based on the price to book ratio, the price to earnings ratio, and so on, well, you make your homework, you think the stock is cheap, so you buy it. And when your homework is correct, well, the undervaluation will go away and the valuation will go up as a result. the undervaluation disappears, and the main reason why you bought the stock, well, it's no longer there because the company is not undervalued anymore. So as a result, you should sell the company and buy a new undervalued company again. And you do that again and again and again. So from this perspective, well, value investing is somewhat an active investment strategy. While when you compare this with quality investing, for example, well, with quality investing, you try to find a wonderful company. And when you made your homework and your homework is correct, well, the intrinsic value of that company will increase year after year. And please know that in the long term, stock prices always follow the evolution of the intrinsic value. So as a result, when the intrinsic value keeps increasing, there never is a reason to sell because the intrinsic value increases, the stock price follows over time, and your investments will do well. So, from that perspective, well, quality investing is one of the only investment strategies where you can use a buy and hold strategy, for example. So, to recap, well, Warren Buffett evolved over the years from a value investor to a quality investor. Quality investing is all about investing in wonderful companies, and you do this by following 3 steps. 1, buy wonderful companies. 2, led by excellent managers. And 3, trading at fair valuation levels. And then, last but not least, the fundamental difference between value investing and quality investing is that with value investing, you use a somewhat active investment strategy, always buying undervalued stocks and selling them when the undervaluation has disappeared. Compared to quality investing, there you can use a buy and hold strategy because when your homework is correct, well, the intrinsic value of that company will keep increasing year after year, and eventually the stock price will follow.